Alright everybody, today is August 7th, 2018, and we're seeing a bit better price action in the penny stock market than we are used to. And we have seen a shift in momentum from morning breakouts to more midday big picture setups. So with that being said, I've actually made it a rule to no longer trade for the first half hour of the market open unless there's a pattern that has really good risk reward, like the trade I took on CHKE. So let me just take a pause and let me show you my trades. I took two trades today. One trade on CHKE, it collapsed on me a lot more than I thought it would, so it was a bit bigger loss than I thought I was going to take, but only 1,000 shares on that one since it was morning trading still. So what I've really done in the morning is I have reduced my size, I've reduced my risk substantially, mainly because we're not seeing that big breakout volume in these morning plays. We're seeing the volume in midday in the afternoon. You can see I took a trade on IFMK around an hour after CHKE, bought 2,000 shares at 362, sold half at 387, and then I sold the rest at 399. Should have held on to it for a lot longer because you can see that it squeezed up to the 450s, but I just wanted to lock in those profits because we haven't really been seeing much follow through, so I wanted to guarantee this green day. But you know, looking at the recent price action with IFMK and yesterday HMNY, it looks like it would be very smart to shift our focus into the afternoon, not afternoon, but like trading midday around an hour and a half, 2 hours after market open. So here's the trade I took on HMNY where I made over $800. I bought 25,000 shares on the break over 10.6, and I sold those 25,000 shares at the 14-cent mark. And you can see, of course, I sold way too soon as it squeezed up to 18 cents, but that was a pure dead cat squeezed based on FOMO. I mean, just the fact that we were able to hit the 14-cent mark was way overextended. And then you can see on the 1-minute chart what you can use to know if a stock is overextended or not is the Bollinger Bands. So the way that the Bollinger Bands are programmed makes it so that 80% of the price action is always within the bands themselves. So that means that whenever the price leaves the band, you know that it's going to snap back and correct. So once we started to see this huge exponential growth, I knew, you know, don't chase it. I told everyone in my chat room to not chase it. It's going to fall apart. And of course, there were some people who said, no, you're wrong, it's going to go up. And of course, I was right because I've seen this happen thousands of times, and it collapsed. So that's just a nice way to know if a stock is overextended. But the main reason why I brought up HMNY is because look at this obvious breakout pattern. I don't want to be trading in the morning when we have almost no data. It's too risky right now. I want to trade in the midday after we have a nice pattern develop, after we have the candlesticks have a nice pattern form, and then I want to trade the clear breakout. So HMNY, obvious breakout against that 10.6 level. You can see higher lows just squeezing up and consolidating, and then boom, we get that breakout on massive volume and it squeezes. Same thing on IFMK. So IFMK is kind of a cup and handle pattern. I've talked about these before in the past. You can see, let me just get my drawing tool out. See, here we have the cup, and then the handle, break of the handle is the buy point. Now the area that I got into IFMK was at 362. So I was actually buying into this dip in here, and I was using this 345 level as my stop. So I had really good risk reward because my plan was to buy into this dip, anticipating that this would be a cup and handle breakout. I would take some profits into the breakout, into the high day resistance, and then let the rest ride. And that's exactly what happened. So very simple patterns. The main thing I can recommend for anyone who's trading right now in this current market environment is to not so much focus on taking a bunch of trades, but just focus on taking the one trade that is super obvious. Now IFMK, when I was watching it, I was using the 2-minute time frame just because You know, like once we get into past the first hour of market open, there is volume that dies down, so you get lots of noise in your charts. And the way you can clean up that noise is by using a longer time frame, like the 2-minute or 3-minute. So you can see using the 2-minute chart, it looks a lot cleaner, and it's a very obvious cup and handle breakout. So you simply you buy into the dip with a good risk reward. Here my risk was around 10 cents a share, or no, it was actually like 16 cents a share because I bought at 362, stopping out at 345. But my potential for profit was, you know, the breakout of 374. That right there is a guaranteed 10 cents a share. So right there, it's not great risk reward, but knowing that if we got this breakout, we'd see lots of buying volume and it would squeeze higher, you know, that gives me a lot larger of a profit potential. So even though I sold this one way too soon, it was an awesome trade. It was a textbook setup, and I also alerted it in my chat room when that happened, so all of my Trade Buddy members were able to hop on it as well. So, you know, it's just the main lessons for the current market environment is just to not so much look at the pre-market gappers, because all of those are selling off majorly. We have not really seen a pre-market gapper that has had a gap up, hold its gains, and squeeze higher. Usually what we're seeing is that these pre-market gappers are dominated by short sellers. So I don't really care about news right now. I just want to see what stocks can spike and hold. I don't care if they have news. I don't care why it's running. All I care about is finding the stock that can have a morning spike and hold support. And you can see here, once it started holding support, it started to uptrend. And I don't want to buy into the uptrend quite yet, mainly because it's pretty random. There's no real pattern behind it. You're just assuming that, okay, we're going to make the whole cup and then make the handle. And buying at this point, the whole pattern is already made, you know. And the last thing it has to do is get the volume to break through. So that's a very good area to buy into this cup and handle pattern. And that's why I like this pattern so much. Now, when it comes to the patterns that I believe are working the best in the current environment, it is the cup and handle pattern, it is the ABCD pattern, and it is the flat top wedge pattern. Now the thing about these patterns is that they're all kind of the same psychologically. What they play off of is essentially having the short sellers enter the short positions into this double top, and then they get squeezed out. So the same thing happens with an ABCD when they short into the higher low, or the lower high, I should say. Same thing happens with a flat top wedge, using the top of the wedge as the risk level. And the same thing happens here with the cup and handle, where they have the double top and they short into that double top, expecting it to, you know, break further. But when it catches support, they get squeezed out. And that's exactly what causes all these spikes. So even though the patterns look a bit different, I mean, they're all essentially the same once you understand the psychology of them. And that's why they are all working really well right now. So that's just a quick video lesson today on IFMK and HMNY. I'm looking forward into trading tomorrow. Like I said, my game plan for the current market environment is not to trade in the first half hour or so unless there's a very clear setup, because we're seeing a lot more breakout potential and follow through about an hour and a half or 2 hours after market open. Alrighty guys, so hopefully you guys enjoyed this lesson. If you do, please leave a like, comment, and subscribe, and I'll see you guys in the next video lesson.